square meter building to where we are today, which is over 7,000 square meters under roof. From the IDC, we received two types of funding from them. One was to expand our business to new products, so they funded us with new machinery, and they gave us funding for working capital as well to help us grow our business at a faster pace.
I'm Zureida Saib, the owner of ZA Gear. ZA Gear has been in operation for 27 years. We've been a very small company that has grown from just 2 people, which is my husband and I, to over 150 employees. The support from the IDC and the people that were in charge of the applications, they were absolutely efficient. And thanks to the IDC that we now have the new ZA Gear, which is now Design House and Skills and Development Center.
Growing the national economy, contributing to reconstruction and economic development across the continent requires sustainable partnerships. At the IDC, we use our competitive industry insights and professional expertise to partner with businesses and provide tailored, value-creating funding that advances inclusive industrial development. Visit idc.co.za. Let's partner for growth.
Good morning, ladies and gentlemen, and welcome to the announcement of the IDC's annual results for the year ended 31 March 2024. My name is Tshepo Ramudibe, and your moderator for the day. Thank you once again on behalf of the management team and the board of the IDC, and our chairperson, Ms. Busi Mabuza, who's with us. It's truly a pleasure for us to be with you this morning. Before we get started, permit me to just give a few guidelines on our interaction this morning. Please be aware that the IDC's annual report financial statements were published on the Johannesburg Stock Exchange News Network, available for download. So please take the opportunity to download the material that will supplement and help you in unpacking and understanding the IDC's results for the day. We are also live on social media with this webcast available from the IDC social media handles, and we look forward to any interaction, feedback that you may have. Our program today has 3 key participants: the chairperson of the IDC, Ms. Mabuza, the interim CEO, Mr. David Jarvis, and the Chief Financial Officer, Mr. Isaac Malevu. I will invite the chairperson to kick us off with welcome remarks, who will then hand over the baton to the interim CEO, followed by the CFO. And after the presentation of the results, we'll have an interactive question and answer session. To all our colleagues joining us on the webcast, please do look out for the chat functionality where you can pose your questions. I will have access to that platform to pose questions to our panelists, the interim CEO and the CFO. But also for colleagues in the room, we do have roving microphones. I will invite you to also participate and ask questions to our panel. But without further delay, let me invite the chairperson of the IDC, Ms. Busi Mabuza, for her remarks. Madam Chair.
Thank you so much to our program director, Mr. Tshepo Ramudibe. Esteemed stakeholders, guests, and members of the media, IDC staff, executives, and of course our interim CEO, board members who have been able to join us, good morning to you all. Thank you for joining us this morning for the announcement of the IDC's annual results and our report back on the corporation's performance for the financial year ended 31st of March 2024. The global operating environment was volatile during the period under review, demanding that the IDC remains focused on its mandate. All at the corporation focused on ensuring that our work supports the recovery and development of our economy, and this, of course, in partnership with our business partners. The GDP growth rate, which was below 1%, reflected the impact of both the global factors as well as the domestic constraints that were experienced. Fixed investment activity was modest, and headwinds included logistics infrastructure challenges, generally weaker demand, and softer export commodity prices. Thankfully, ladies and gentlemen, we're now seeing some green shoots, which are to a degree as a result of the relentless effort of our government and organized business, especially those aimed at addressing bottlenecks that required attention. I am pleased this morning to highlight that the corporation approved on-balance sheet financing of 17.3 billion rands and disbursed 15.9 billion rands during the financial year under review. The details will, of course, be provided by interim CEO and the CFO shortly. Our activities included supporting the development of projects from idea and concept stage to bankability. We also funded feasibility studies for priority industrial projects together with strategic equity partners. Recognizing the challenges faced by our business partners and other businesses, our teams turned to supporting industries that were affected by the energy supply challenges, businesses that were affected by the logistics issues, and all of these were, of course, the hallmark of the last year. One example of the interventions is the Energy Crisis Resilience Scheme for SMEs, whose funding was approved last year. We, of course, also funded a feasibility study for Project Ukuvuselela, a sustainable rail logistics solution that is in the pipeline for the automotive sector. The IDC has ambitious investment and development targets, focusing on value chains with high potential for sustainable, jobs-rich industrial development. The continued commitment to inclusive and sustainable industrialization is evident in our corporate plan for the 2024-25 to 2026-27 MTEF period, wherein we've committed to deploy over 60 billion rands on balance sheet funding over that period. That said, ladies and gentlemen, the corporation remains on a solid financial footing, and the CFO will, of course, highlight the sustainable earnings, the resilient balance sheet, as well as the robust liquidity and funding position, all of which are factors that form a foundation for us to realize our ambitions. We continued in the past year our endeavors to measurably contribute to the transformation agenda. And this, of course, is evidenced by continued support of Black industrialists, Black-owned companies, as well as women and youth entrepreneurs. The 22.3 billion rands value of funding committed and facilitated to the transformation categories that we track is testimony to our unwavering intent. And of course, we should continue doing more. The board approved during the period under review a revised responsible investment policy, which seeks to embed environmental, social, resilience, and governance principles in how we deliver our activities. This is important as it should reinforce our intent to achieve transformative economic impact that is socially inclusive, but that also facilitates transparent, sustainable impact. Ladies and gentlemen, as I draw to a conclusion of these remarks, let me, on behalf of the board, as well as everybody at the IDC, extend a warm welcome, may seem a bit late, to the Minister of the Department of Trade, Industry and Competition, Minister Park Stau. Thank you so much, Minister, for reaffirming the IDC's role in implementing the government's industrial development ambitions. I also extend, on behalf of the board, our appreciation to all our stakeholders, business partners, who of course include our clients, and of course funders, for your support. We applaud the staff and management of the IDC, who under the leadership of our interim CEO, David Jarvis, continue to prioritize their work. My personal thanks are extended to my colleagues on the board, and I truly appreciate your continued wise counsel. Ladies and gentlemen, I now invite you to join me, please, in inviting the interim CEO, who will be followed by the CFO, who will present what you are here for today, the corporation's performance for the financial year ended 31st of March, 2024. Thank you so much.
Thank you, Chair. Thank you for that introduction, and greetings to everyone who is in the room today and also online. The chairperson, our board of directors, our clients, our business partners, stakeholders, colleagues, ladies and gentlemen. This year we are proud of our performance. I'll go through the details now, but importantly, we've managed to implement against our strategic directive and against our mandate. And this mandate has remained the same over the course of our since democracy, which is to drive inclusive and sustainable development. IDC is at the core of implementing industrial policy, and as part of the new Government of National Unity, that role is set to continue. It's a strategic role, it's one we take really serious, and it's one that we are really proud in, all of us at Industrial Development Corporation. The chairperson has already mentioned the environment in which we found ourselves in the year under review. It was a challenging one, both globally and domestically, and we see it where the rubber hits the road for us as IDC is in the investment figures. So when you have a marginal expansion of investment, then that obviously impacts. That's our bread and butter. That's where we participate with our business partners in investing into the economy. Chairperson has mentioned some of the headwinds which we faced, looking at load shedding, challenges in logistics, interest rates, etc. So overcoming those challenges is something that we not only are impacted on, but also that we need to facilitate a solution to. The chairperson has already mentioned our approval figures, 17.3 billion, and our disbursements of close to 16 billion. These are slightly down on last year, it is worth acknowledging, but the figures from last year were our record performance on the back of a COVID uplift. The company remains profitable, the group remains profitable, and we retain a strong asset base. The CFO will walk us through those figures shortly. If we look at some of the performance highlights, and I'll go into a bit more detail now, we did a lot better this year in terms of our transformation funding, almost doubling the total of transformation funding from 11.4 billion to 22 billion. And this is something that we are really encouraged by. It is a key focus both of the IDC in the 6th administration and also in the 7th administration, that as we drive industrial development, we need to ensure that it is also inclusive. And that includes bringing in black empowered companies, black owned companies, black industrialists, women and youth. One of the areas where we did see quite a strong decline was in our job creation numbers. So we created and saved 17, close to 18,000 jobs. Still an important contribution to the economy, but something that we are already in this current year ensuring that we address and that our impact, ultimately it's an important outcome is how many jobs that we create and save in the economy. So a key focus going forward. We've covered here the spatial distribution of our approvals. What is quite encouraging is that in the year under review, we saw greater funding going to the traditionally, you could say, less developed provinces. So Northwest, Northern Cape saw a lot more activity from IDC. Limpopo, quite a lot of activity, close to 2.4 billion in terms of approvals. That included infrastructure support, as well as support to our subsidiary, Foscor. It's quite interesting to look at where our money goes. If you look at the type of activity that we're supporting, if you look at the chart on the left, over 50% is going to expansionary funding, so close to 9.2 billion going to expansionary funding, and then just over 4 billion going to startups, the yellow portion. So this is really key to our mandate. This is where we are growing businesses, we're supporting them to in their operations as well as expansions. So that 3/4 of our funding goes to those endeavors. You'll see there is a large chunk, that green block of 3.25 billion, which goes to distressed businesses. And this is also an important role. When we're looking at an environment that like we're currently in, an important objective is to maintain businesses which are in a challenging environment. The objective is always to maintain their business on the back of them being sustainable. So we wouldn't be supporting businesses that we think don't have a future. So they do have to emerge out of that support as sustainable enterprises. Transformation funding I've already spoken to. We've seen much more activity in transformation funding in the year under review across most of the entrepreneurs that we track. So women entrepreneurs, almost a tenfold increase. Black industrialists, significant increase, almost a third up. Black empowered and black owned businesses, 13 billion rands worth of our funding committed to them. So a marked increase as well. Youth entrepreneurs, one of the disappointing areas, and I'll return to that when I close out after the CFO has spoken. Ladies and gentlemen, our investments go into the productive sectors of the economy. And we've given some details in the presentation, and you'll find it in the integrated report, around how we support the value chain development within these sectors. So we want to leverage our balance sheet to grow sustainable value chains within South Africa and on the continent. An important area is agriculture and agro-processing. Agriculture is obviously a key opportunity to create jobs. We do believe we have a comparative advantage, and we supported businesses with 1.4 billion rands worth of approvals during this period under review. We also, as you would well know, intervened to support Tongaat Hewlett Limited with a working capital facility that supported them through the business rescue process. So that's an important intervention to sustain the jobs in that area, the regional economy, and the small growers who rely on Tongaat Hewlett. In mining and upstream metals, we approved 2.7 billion. What's exciting about this area is, for those who think mining is a sunset industry, it's not. It has an important role to play in industries of the future, the green economy, and that's where our focus is. We obviously have a large book that is focused on mining and upstream metals. The book of the future will be more focused on the opportunities that we see in critical minerals in the green economy. Two of our investments were to support battery-grade manganese during the course of the year, as well as graphite, battery-grade graphite. So these are important investments which we're making to support that play towards an industry which is going to grow 5 times over the next 20 years. We also are quite proud of our initiative with the Department of Minerals, Resources and Energy to bring junior miners into the mining industry. In energy, we're looking at 2 billion rands worth of approvals in the period under review, bringing on board another 1,500 megawatts of electricity. So an important role and a continuation of the role that we've played. IDC, along with other DFIs, were key to de-risking the renewable energy IPP program. And subsequently, we supported a quarter of those investments. We've also focused on supporting small businesses and township businesses deal with the impact of load shedding on their businesses. So we have a resilience fund where we've approved 546 million rand, both in terms of the SME and the township resilience funds. So over 500 million rands worth going to support those small businesses as they struggled with the effects of load shedding, and also as they are able to now green their operations. In other infrastructure, we approved over 2 billion rands worth. I've already mentioned the Mokolo Crocodile Water Augmentation Project, an important project for driving industrial development in Limpopo. And we also supported a railway upgrade, again, to support industrial development. So where we aren't investing directly in value chains, we're supporting the infrastructure around them, the ecosystems around them, that environment to facilitate industrial development. Manufacturing is obviously at the core of the IDC mandate. Over half of our portfolio's exposure is in manufacturing, according by number. Most of our business partners are in the manufacturing business. And this is, as you can see, where a lot of jobs were created during the year under review, 8,500. Excuse me. And we're quite excited about our partnership with Stellantis, where we are going to be constructing a new facility that will be building the Peugeot Landtrek bakkies and creating 1,000 jobs. In other manufacturing, in particular textile, wood and chemicals, we approved 2.8 billion rand. And this is an area where we've played a strategic role in supporting the value chain, especially the CTFL value chain, including managing a fund, the Clothing, Textiles, Footwear and Leather Growth Program, which we've supported 42 businesses during the course of the year. Tourism and services, another opportunity as a growth industry. We've approved close to 900 million. Within that, we've supported 18 film projects. Again, a lot of jobs are created within this industry, so it is a key focus if we're looking at improving our jobs numbers and our labor impact in the coming period. I've already talked a bit to our SME and township economy support. So over 3 billion rand was approved for SMEs during the year under review, including close to 1 billion rand for our SME Connect program. So the SME Connect program works by us working with established corporations to create market opportunities for SMEs. It's part of the role that we play, facilitating economic growth. A couple of years ago, we took the decision to take project developers and industry planners out of our transacting units into new units to create a project development capability. And this is a traditional role that IDC played, which is really to say, how can we support an ecosystem around the development of a value chain? How can we invest in catalytic projects that will drive the development of value chains? We currently have 47 projects within that space, and if these are brought to fruition to investment phase, they could generate 69 billion rands worth of investment opportunity. The projects we are developing are obviously in strategic sectors where we expect growth: battery minerals, automotive manufacturing, pharmaceuticals, and the green economy. We also play a role in supporting the social and solidarity economy, and also in managing funds on behalf of government, mainly, and other players that are affiliated with our objectives and support our development mandate. So during the year under review, we approved close to 3 billion in funds for off-balance sheet funding. Excuse me. The Social Employment Fund remains a flagship of the Presidential Youth Services, and we're very proud as IDC to manage it on behalf of government, in particular in partnership with the Presidency and DTIC. During the year, the fund disbursed close to 1 billion rands worth to unemployed, mainly youth, to give them work opportunities in support of the social economy. And we found that not only do we have this successful program in that we roll out programs that support communities, but also it creates an opportunity for youth to get into the employment cycle. So we found that there were youth dropping out of the program. We were concerned because obviously you don't want to have a high dropout rate. But then we found that a lot of them are actually getting employment in more permanent opportunities. So that close to 60,000 job opportunities that you see there is really something that we are very proud of, especially where the beneficiaries are able to then find themselves in a permanent employment opportunity. The IDC has a comprehensive corporate citizen role. Our bursary scheme, the work that we do within the social economy, our corporate social investment are all punching above our weight. And during the year under review, we disbursed 60 million to CSR beneficiaries, including close to 12 billion for the humanitarian relief. I spoke about our portfolio, and it's worth just quickly reflecting on it. All of these approvals and activity lead into this portfolio of 94 billion across close to 640 clients, spread across South Africa, mostly 81 billion, and the continent. Wherever you go in South Africa, you'll find a factory, an entrepreneur, a farm, a warehouse, infrastructure, which has been supported by the IDC. If you include our corporate social investment activities as well, that footprint across South Africa is vast. And it's mostly in the form of debt, just over 60 billion, but also in the form of equity, where we take a shareholding, 32 billion. I won't go into the details of where our investments on the continent lie, but they are mostly in Southern Africa. I'll now hand over to Isaac Malevu, our Chief Financial Officer, who will take us through the financial performance, and then I'll return just to close out. Thank you, ladies and gentlemen.
Good morning, ladies and gentlemen, distinguished guests, members of the media, shareholder representative, all protocols observed. It brings me great pleasure to present the financial results or performance of the IDC for year ending 31 March 2024. We are pleased with our solid performance in the year under review, underpinned by sustainable earnings, a resilient balance sheet, with robust liquidity and funding position. Our earnings were supported by an improvement in interest income on the back of a high interest rate environment and an increasing loan in advances. There was a decline on investment income, especially when you take into account the non-repeat of dividends from some of our equity portfolio. In terms of the results, at the group level, we are pleased that our revenue were at 24.3 billion. When you compare to the prior year, they're down 8%. Our total assets, we recorded 154.9 billion, down 3%. Profit after tax was 7.8 billion, down 27% when compared to the prior year. Total equity, our reserves, 108.6 billion, down 1%. Borrowings were at 28.5 billion, which is a net decrease when you compare to the prior year at 7%. Our IDC company results, revenues, we're pleased with 14.1 billion, down 5%. Our gearing remained resilient at 29.7%, compared to 29.8% in the prior year. We are very pleased with our profit after tax at 7.4 billion, which has increased by 25%. We remain concerned, of course, with our impairments. Slight improvement at 36.4%, but the non-performing loans did increase to 45.2%. We'll unpack this in a short while. Cost-to-income ratio was below 30% at 23%. In terms of our balance sheet, it remains resilient. Our reserves have come down on the back of declines in the fair valuation, given that our portfolio is largely in mining and metals. As you will know, that the commodity cycle is on a downward trend at the moment. But we're pleased that with our earnings increasing and increase in loan and advances, our gearing remained 29.7%. Our listed equity portfolio was impacted largely by Sasol share price. Of the 5 billion decline, 4 billion of that is attributable to Sasol. As you know, they had their own operational challenges and also a declining oil prices, which gave rise to a declining share price. In terms of the trend analysis, at the group revenue, we do benefit from a diverse sources of revenues. Our revenues were impacted largely by manufacturing income, which did reduce. That is largely from Fosco, on the back of low production and reduced sales volumes. Interest income did increase on the back of a high interest rate environment. We did see a slight reduction on dividend income, as we saw a non-repeat of some of the extraordinary dividends we received last year, mainly from BHP. To give some detail on the group profit after tax, in terms of this waterfall, there are two factors that impact on our group profits. The first one is a non-repeat of the reversal of impairments at Fosco. Fosco reported 2.9 billion profit last year, and this year they reported 366 million. We did highlight that it is a non-repeat. The second factor, it is the lower profits from our associated income, largely in the mining and metals sector. In terms of our NPLs, or non-performing loans and impairments, the biggest driver of that 45% that increase is largely on the back of significant sizable clients. We did report this last year, that our non-performing loans tend to be lumpy. and there are significant, sizable clients in there. Some of them, we support them as part of our role as IDC, of playing a countercyclical role. Some we are turning around, and we are seeing some progress. The concentration by sector is largely in the mining and metals, which account for 55% of our non-performing loans. In terms of our funding model, it has not changed. It remains the one that supports our developmental mandate, largely made up of internally generated cash flows. The funding gap, we then tap to our partners and lenders that we remain grateful to, who always support us in terms of providing that additional funding. We do benefit from diverse sources of funding. In the current year under review, there was a decline in the public bonds as part of settling the maturing debt. To fund the liquidity requirements, we did benefit from increased loans from the domestic banks and international banks, who remain supportive to the cause of the IDC. In terms of our debt maturity profile, it is smooth. However, there is a marked increase or spike in 2027, largely from the UIF bond. We are pleased that our negotiations with them are going well. They will, in all likelihood, refinance that bond when it's due, and therefore it gives us comfort that our maturity profile will remain smooth. In terms of our debt funding capacity, we do have a headroom of about 9 billion, given that the board has approved about 11 billion. So far, we've only raised about 1 billion. So we are comfortable that there is sufficient headroom to support our developmental mandate. And finally, we do remain committed to good corporate governance. We are pleased that our financial statement, we report an unmodified audit opinion, which is consistent with the prior years. We continue to comply with the JSE debt listing requirements. On the irregular expenditure, fruitless and wasteful expenditure, we are pleased that in the current year we saw a decline. We are reporting 5.6 billion compared to the 5.9 billion compared to 7.6 billion we reported last year. As we did mention, it's largely driven by our subsidiaries, Fosco in the main, who have put in place mitigating actions to reduce this irregular expenditure. And we do expect going forward that we should see a decline in those irregularities being reported. Before I hand over to David, I do want to acknowledge and give my thanks to the board, the audit committee, the chair of the board, chair of the audit committee, the colleagues, for their unwavering support, and also our lenders and partners, our clients, who make it possible for us to continue the work that we do as IDC. I will then hand over to David to conclude and provide the outlook.
Thanks, Isaac. So when we look at the outlook, we're also talking from a perspective that we almost halfway through our current financial year. And we are confident of our performance and the contribution that we will be able to make to the development of the South African economy. We've already seen the positive developments around load shedding, logistics, and the impact that that's having on business confidence. And business confidence is obviously the lifeblood of IDC, of IDC's business. Without business partners who are keen to invest their capital in the economy, we wouldn't be able to do our work as well. On the African continent, we've recently approved a continental strategy that we believe will result in us supporting value chains across the continent, where we will invest in projects in the new growth areas which will be to the benefit of both host countries and South Africa and in support of the free trade agreement. So overall, the operating environment, we believe, is one which will be more conducive to us playing our role. We've also obviously identified areas where we believe we can improve as a corporation, and we've been implementing plans to make sure that we do better this year. So overall, satisfactory performance under difficult conditions, and a renewed focus on areas where we believe we will get the most impact. Firstly, obviously, the low carbon transition and green growth, whether it's within renewable energy, green hydrogen, battery manufacturing, critical minerals, which I've already mentioned. These are going to be targeted areas for our project development capabilities and also for our coverage and transaction sourcing within this period. We are also looking to diversify our book further, to focus in particular on labor-intensive activities. And we've already seen positive developments in this regard. So those industries that I'd paused on to say that we need to do more work, whether it's agriculture, some of the services, machinery and equipment, those are the areas where we believe we can have a greater impact on job creation, which is at the core of our mandate. We'll continue to do the work that we do to support economic enablers, infrastructure, focusing on water and logistics. Those remain key areas as a means to an end to build industrial and develop industrial capacity. Our support on inclusive growth is non-negotiable. Ever since the Act was amended to include support for previously, what was then called previously disadvantaged, the focus has always been on bringing entrepreneurs who have great ideas, facilitating that. They might not have the balance sheet because they did not have the privilege of the past. So it's our role to bring them into the economy. So it's black industrialists, black-owned companies, youth, women entrepreneurs, and again, in this current period, we're seeing in particular youth, which I identified as a challenge in the previous year. So the year under review, the results, we've already surpassed them with our youth funding for the current year. So a continued focus for the corporation. We've been privileged to have interaction with our minister, our new shareholder rep, the deputy ministers, and there's the role of the IDC, the role of industrial policy first in driving economic growth and inclusive growth remains. And the importance of industrial policy means an important role for IDC. We're one of the implementers of the state's industrial policy. It's a role that we take really seriously. IDC staff are really proud to serve a purpose. We're a purpose-driven organization, and we're very proud that what we do on a daily basis can lead to growth in the South African economy and on the continent. I'll echo the thanks of both the chair and the CFO to our business partners, our partners in investment, management and staff. I in particular have really grateful of the strategic guidance which I've received from the board since I took over as interim CEO in October. Ms. Mabuza has really supported me in this role over the last 9 months, and I really appreciate it. We continue to drive industrial policy as a corporation, and we continue to drive inclusive growth, and we're committed to our development agenda. Ladies and gentlemen, thank you.
Thank you, David, and thank you, Isaac. Ladies and gentlemen, this brings us to the end of the formal presentations, and we'll get into our question and answer session. I've invited our two executives to stay on and help us with the questions and answers. To all our colleagues online, I am looking at the chat functionality for any questions that may come. And please, if you could just list your name and the question itself, and I'll facilitate just posing it to our panelists. But for colleagues in the room, we do have roving microphones. If I could please ask you to raise your hand, indicate which entity you represent, and pose your question from the floor. If I may please kick off with the questions. First questions in the room?
I should have brought my presentation. We took them into submission.
Perfect. Let me just kick off. David, I think and more to the current operating environment, and in view of the historical performance and what the year that was, the outlook speaks with great positivity and enthusiasm, but I think, what are you seeing in the current emerging landscapes that gives you the confidence?
Thanks, Tsepo. As I mentioned, the reduction in loads, so the ceasing of load shedding is really important for our business partners and our potential business partners. So that has been a real boost to the environment. Then the challenges which are being addressed within the logistics environment and the general rise in business confidence really do fuel my enthusiasm for the coming period. I'd also covered the pipeline that we have of projects which we are developing in partnership with strategic and technical partners, which I believe will bring online projects which can really contribute to the development of our value chains and the productive sectors of our economy. So there's a lot to be enthusiastic about.
Thank you. And Isaac, you'd spend a bit of time just really speaking to not only the diverse sources of our revenues, but what was the key takeaway from your own analysis just on the presentation, just on the financial performance of the IDC?
Thanks, Tsepo. I think the story on our financial results is that we remain committed to being financially sustainable whilst supporting our developmental mandate. And as you saw, our net profit after tax at the company level increasing by 25%. That shows you that the quality of our book is good, and we do see interest and capital repayments coming through. And our equity investments, the dividend income, even though it has come down, but it's still resilient. On our balance sheet, I think the takeaway there is that our portfolio has been largely impacted by the commodity cycle, the downward commodity cycle, as with the fair valuation in the mining and metals sector in particular. But that's really expected in a downward cycle, but we do expect that as the cycle improves, a commodity cycle, we should see an improvement. And that would also support the income from our associates, which in the current year we're down, but we should see that improving going forward as the commodity cycle improves. Thank you.
Thank you. And David, if I may please just ask you, I know in your slides you did cover, the project development funding, but much more looking forward. But perhaps if I can just ask you to just recap on the priority areas that the IDC is looking at. Last we did report back to the market around the IDC's role in the commercialization of the hydrogen economy. But I do have you, but we also do have Joanne Bate in the room. But Joanne, if I could please ask you, if you could just give a bit more context on the IDC's role within the project development environment, but also this particular role that's been allocated to it on the hydrogen economy.
Thank you very much. So we are, as David has said, we're very excited about the role that we're playing in project development. We do think that it is one of the very significant decisions that was made 5 years ago when the new strategy was implemented. And what we've seen is a significant development of the pipeline of assets that will have an impact in large chemical manufacturing and energy opportunities, really looking at decarbonization as well as new industries. The proactive role we've played in industrial pathways, I'm going to mention 3 things. The first is, you will all know about the role we've played within the master plans together with DTIC. What we wanted to do in going into COP28 was to ensure that the conversation shifted away from just decarbonizing electricity, which doesn't solve for heavy industry, and really looking at how these individual master plans combine into sustainable industrial pathways, which really are representative and reflective of both our current economy and the economic growth potential that South Africa and the region has through these sustainable industrial pathways. So the objective within the sustainable industrial pathways is really to look at how we can identify the transaction and project opportunities that allow us to create the next phase of large investments and quality assets for the organization. Some of those could be the legacy assets. So moving on to green hydrogen, we've been leading the Green Hydrogen Panel on behalf of the Department of Trade, Industry and Competition, and I was chairing that panel. And we concluded the green hydrogen commercialization strategy that built on the fantastic work of Department of Science and Innovation and the Hydrogen Society roadmap. But it translated that into an execution opportunity, identifying key projects that the country can prioritize and execute against across the entire hydrogen value chain, recognizing that whereas foreign countries and many other African countries see hydrogen as an energy opportunity, we see it as an industrial value chain opportunity. So it really is the opportunity to decarbonize our current chemical industry and to ensure that we set ourselves up for the hydrogen economy of the future and the hydrogen derivative products. And within that, there were 11 projects declared as strategic integrated projects. So we're working very closely with the Presidency and Infrastructure South Africa in order to ensure that these projects are unlocked, and also with key private sector partners. The hydrogen economy is very much being driven from private sector investment locally and globally. And as part of the commercialization strategy that was approved in Cabinet last October, we are looking at what are the incentives necessary and possible in order to further unlock that economy. Recognizing that incentives have, and we've seen in the US, the Inflation Reduction Act has not necessarily had that necessary impact. So what we don't want is incentives that are going to create uncompetitive global organizations. So it really is finding the right levers in order for South Africa to exploit the enormous resource capacity that it has in the country. So on resources, we'll jump into critical minerals. And in both the data economy and the green economy, the significant growth that is required in critical minerals and rare earths sits very much within the sub-Saharan region. South Africa has a significant complement of these minerals within the Northern Cape and other provinces, some really phenomenal resources that we're working with partners in unlocking. We have about 17 projects in development across the critical minerals value chain. And our approach to critical minerals is a bi-directional strategy, looking at different investments across the value chain. So investing from the mineral resources and extraction through to precursor materials, recognizing the significant economic value add and global contribution of a dominance in precursor materials, which is largely dominated out of China. And then working from the other side, battery assembly into battery cells and down to precursor materials. And in unlocking that, we're working very closely with a number of partners in the market to ensure that South Africa accesses and dominates in the pieces of the value chain that make sense for us to extract and create value. So it very much is a value creation opportunity. I think the last thing I'll mention, sorry, there's so much happening in this space, is we work also to ensure that there's complete alignment. I mean, this is a country priority. Hydrogen and critical minerals are also 2 of the 5 country big bets. And we worked very closely with the Just Energy Transition Investment Plan team in ensuring that the new energy vehicle value chain, which is from critical minerals to support the auto sector, as well as green hydrogen, that those chapters aligned directly to the objectives and the strategies that we are executing against. And the IDC is very pleased to be managing the project management offices of both of those investment plan chapters. Thanks.
Thank you, Joanne. Much appreciated. Ladies and gentlemen, I do have a question from Kabelo. Mojanaga at Afroval Metallics. And Kabelo, I'll go to the questions on NPL. So it's to the CFO. The increase in NPLs is worrying. What is the major cause of the NPLs? And how do you plan to reduce it? But if I can invite you just to really speak at, just based on the slide, but also invite Lucretia Kumalo, DE, for client support and growth to really speak about the tactics and strategy that we've implemented to really help our customers to reduce NPLs. But CFO, if I may, please ask you just for high level, and then we'll ask Lucretia to just unpack that a bit more. Thank you.
Thanks, Tsep, and thanks, Kabelo, for the question. Yes, indeed, it is worrying and remain a concern to us. I must also hasten to say, in those non-performing loans and numbers that we have, our policy in terms of the performing or recovering non-performing loans is that they should be in stage 3 for a period of 12 months before they can be migrated out of stage 3 into stage 2 or 1. And in there, we have about 2.4 billion rands of clients in terms of value of non-performing loans, which they are performing, but they just need to complete their curing period. Having said that, though, there are about 5 clients in there, which makes up about 40% of the non-performing loans. And 2 of those are legacy. In fact, 3 of those are legacy clients that we've discussed in previous engagements. So some of those have either have their security deteriorating, or there is an additional interest that has been added. There are also 2 new clients, mainly from our rest of Africa region, which have been added, given some of the economic challenges that are being faced in that country, but also some of the operational challenges. So we've taken an approach that we should be providing for those. In terms of our mitigating actions going forward, they remain the same. It's really to turn around those clients that we know they have a good prospect of turning around, restructuring some of those clients that need to be restructured, and writing off where there are no prospects of recovery. So that's really our plan. Our target in terms of the next 3 years is to reduce the non-performing loans to about 25% or below, and we remain committed to that target. Thank you.
Thank you. Lucretia, over to you.
Thank you, Tsepo. And thank you, CFO. I think you've covered me quite a lot. The challenge has been the 12-month curing period that we've experienced. And when we look at the names that are in the NPL space, at least 4 or 5 of them are already performing and paying us. And we're just waiting for the curing period to come to pass so that those can then be removed, and we will see that 2.4 billion rands being reduced. We are working very closely with our clients, ensuring that we turn those around, especially the ones that are highly in distress. Of course, one of the biggest ones remains our big mining client. That carries at least 6 billion rands worth of NPLs. So that's just one client at 6 billion rand. And we are working very hard to try and resolve that together with the board. Thank you.
Thank you. Any more questions in the room? Towards the back, gentlemen. Thank you. Thank you.
Thank you. I just want to direct this to the CFO. I noticed that you reported the same figure as net profit for IDC Group and IDC Company. Is it by coincidence? Why is it showing the same, or is it an oversight? I'm not sure. Please, can you clarify that?
It is coincident. No, it is coincident. It's not any fluke. I mean, I'm showing our financial statements as well. You can also just double check. But it is the case. While there was an increase in company, at the group, we're referring to a decrease, but the same number. But last year we had 10.7 billion, which has come down to what's 7.4. Thank you.
Thank you. Thank you. There you go, my lady.
morning. Thank you very much. It's Kate from RMB. My question's directed to the CFO. Debt capital markets funding has typically been quite an important source of funding for the IDC. We haven't seen too much of that lately, and with upcoming maturities, I just wanted to get some color on your plans. Thank you.
Thank you, Kate, and again, we appreciate the support from our lenders and also our partners. In the prior years, as we did have quite robust liquidity position on the back of extraordinary dividend income, you will recall in the high commodity boom, we received quite extraordinary dividend income, and that gave us surplus cash. So at the time, there was no need for us to tap the market, debt capital market, but we did have no deal roadshows, just to express to the market that we are still interested because we depend on the debt capital markets to close our funding gap. In the current year, as you notice, our public bonds have come down. It is our intention that before the year is over, we will go to market to issue bonds. So that is our intention, and we do hope that RMB and other banks will continue to support us as they've always done. Thank you.
Thank you so much. It's Kanyisa Lombo from Standard Bank. I see that the group has taken a knock on the mining and metals portfolio, both from an NPL perspective as well as the revaluations perspective. Is there a strategy to diversify, reduce, and what is the plan going forward for that portfolio? Thanks.
Kanyisa, thank you for that question, and I think it's a question that we always try and address because it talks to equity price risk. We pleased our gearing is low, which means currently our portfolio can absorb some of the volatility and the concentration risk that is inherent. Having said that, though, it is our intention, I think Joanne spoke to it, and the CEO, interim CEO, that as part of diversifying the South African economy and supporting the decarbonization initiatives, which talks to the greening of the economy, we do see an opportunity as IDC to diversify our portfolio going forward. In the current year, where, of course, there is opportunity for us to diversify some of the current portfolio, we'll do so by looking at various instruments. We do see the top three accountants, which largely drive this volatility referring to, as strategic to the IDC and strategic to the country. But really, if you unpack our results, where there has been a surprise, a decline is in the Sasol share price. The other two counters have been largely okay in terms of their fair valuation. In terms of the unlisted, we did have experienced some decline in the Mozal, which is one of our associated companies. And again, there is a personal challenge as opposed to the client being largely affected by the commodity price. So we do see some of these improvements happening in that space, that our portfolio largely will remain resilient. But we will continue to look at strategies that talk to how we can diversify our portfolio. And we are also a long-term investor, so I think there is also that acknowledgement that we have to remain responsible in making sure that our portfolio support the developmental mandate and also the initiatives that are currently in place to decarbonize and support the new industrial parks. Thank you.
So maybe just to add, within that sector, there's a lot of variety, and it's driven by different factors, whether it's growth in China, whether it's internal combustion engine usage, so the need for catalytic converters, the green and the need for green economy, critical minerals that will support the green economy and the transition. So as Isaac's already mentioned, there are strategies obviously to look at how we rebalance our portfolio towards commodities which are more the growth commodities of the future. He's also mentioned that there are a number of large counters within that portfolio which have been experiencing challenges, and those we really need to work on turning those around and making sure that we can bring them back to profitability where they aren't profitable. And as Lucretia has mentioned, we've already seen that we have been able to do that on a number of these counters. So it's not all doom and gloom within mining. South Africa and the continent has a comparative advantage when it comes to mining. The challenge is really to stabilize those assets where there's challenges, and to grow assets where we think there's opportunity. And that'll be our strategy, and that is our strategy going forward, in line with our strategic agenda.
Thank you. Thank you, David. Colleagues, any more questions in the room? There are none that have come through on the chat platform. If I may, Ray.
Good afternoon. I think this is a question to the executive team and the board. Congratulations on the sterling set of results. I think the sustainability you show is beautiful, but the way you've connected the dots backward is outstanding. To build more, what insights, intelligence can you share with us about connecting the dots forward, specifically in terms of the BRICS opportunity? Because I get a sense that you could, as a center of excellence, offer benefit in how we see that foresight or opportunity for BRICS.
So, should I kick off?
Please,
Yeah.
if you could.
So, we are continually looking for business partners that we can cooperate with in taking forward investment opportunities. And we know that we do have a history of working with both foreign direct investors from Europe, from the States, and from BRICS. And it really is a space that BRICS, we believe, do offer a lot of opportunities. If you look at, for example, the opportunities for the battery value chain for electric vehicles, new energy vehicles, which comes out of, in particular, China, South Korea, Japan. I mean, those are opportunities which we are actively pursuing. So we are continually seeking to mine those opportunities and to encourage investors to partner with us and invest in South Africa. Part of the value proposition, I was recently in China, and challenges which were raised, for one was around load shedding. So it makes our job easier if we can go to those investors and say, we believe that this challenge has been addressed. But even other challenges, they'll raise exactly what we see as local investors. For example, the logistics challenges. Other challenges that they experience which are unique to them are, for example, around visas. And we know that under Operation Vulindlela, there's an attempt to ensure that the skilled visas are made more easier to obtain, so that we can have skilled labor coming into the country to facilitate investment opportunities. Obviously, as you bring in these skilled labor, so we're looking at high skills, professional skills, especially where a company is investing in a new plant. The importance of bringing in those who understand how to operate that plant, how to ensure that it's brought up to operation is important. So we know that government is taking this seriously. It's a way of creating local jobs. It shouldn't be replacing local jobs, so it really is a stimulus to creating local jobs. So those are the kind of areas which they are raising as challenges, and we're working with our partners in government to overcome the challenges where they highlight them.
Yeah. Maybe just to add as well, just 2 points. There's an opportunity for us to collaborate and continue to collaborate with the local DFIs, African DFIs, and foreign DFIs. especially on projects where there is a mutual benefit and there's also an opportunity for us to demonstrate our capability as a country, but also our capability as an organization. The second one is on encouraging foreign direct investment by co-investing alongside some of the foreign investors who look to IDC and other local DFIs to de-risk the projects that they're looking to invest in. And we do see that as a huge opportunity for us. Thank you.
Thank you.
And I should just say thank you to the gentleman for his kind comments.
Thank you very much for your kind
Appreciated.
Thank you.
Thank you.
Always appreciated. But ladies and gentlemen, if I may please bring our proceedings to an end. Thank you for joining us once again as we presented the results and a review of the impact of IDC funding for the year under review. We wish you all the best for the day ahead and look forward to partnerships, collaborations as we look to increase job-rich industrialization in the country and leverage the current platform that this GNU government and the platform for growth that's been set up. Thank you, David. Thank you, Isaac. To the chairperson, as always, thank you very much. All the best. Cheers.